Day trading is not difficult. If you know how to adjust your trading criteria according to the market conditions. I'm David Capablanca, a millionaire stock trader. My P&Ls have been verified by multiple third-party firms. In this video, I'm sharing how I adjusted my pre-market trading routine to adapt to the current market cycle. The stock market this year has been relatively slower, especially for small-cap traders. This is due to the uncertainty in tariffs and inflation concerns, so investors and retail traders are less active compared to what we saw during the bull market. However, there are still many great opportunities and high-quality setups if you stay disciplined and let your system do the work. Last month, I only traded for about 15 days out of 22 trading days. I was still clocking in every morning, coming to my trading office at the US Bank Tower. On the days that I didn't place any trades, my pre-market planning routine helped me focus on the better setups instead of forcing a trade every day. In fact, as a short seller, I avoided a massive short squeeze on MLGO thanks to my trading rules. I've been telling my Friendly Bear University students to stay away from this ticker. Later in this video, I'm also going to expose a furu. My friends and I found evidence of this furu calling his short selling community to short MLGO. Not one day, but multiple days, even when the stock kept squeezing higher. This stock went from $4 to $32, liquidating many short sellers, especially the ones who only rely on technical analysis. So if you are serious about trading, I'm going to share two crucial knowledge with you. Number one, my updated pre-market stock selection criteria, and number two, my non-negotiable trading rules. If you have been watching my videos, you know that this is not a channel for you to see fancy profits, and you will never see me trading with a penthouse view or by the pool. I only share realistic methods that turn trading into a consistent business operation for me. So if this is what you like to see, consider subscribing to this channel and give this video a free like. My edge as a stock trader. The way I make money in the stock market is by focusing on the small cap stocks. I only want to short sell small companies that pump their stocks to raise cash. In other words, I use my stock selection criteria to find pump and dumps. Let me walk you through a quick example of a stock that I recently traded to help you visualize how my trading strategy works in reality. Okay, so the stock that I traded was SXTP, 60 Degrees Pharmaceuticals. So it went up on April 8th, 2025, approximately 150% after the open. And as you can see here, the stock halted multiple, I think it halted once near the top. So it was part of my halt playbook. And yeah, I shorted it as it popped up above the pre-market highs, and a very light size, just a starter size, sprinkled in some shares. And as you can see in the execution chart. And then after the halt, I got more convicted, and that's where I started to size in a little bit more. And I'm still respecting that this stock can squeeze more. It's not an A+ setup because it's a 1.4 million float. Also, I saw some Chinese insiders, so it's like, okay, I want to be very careful with my size here. So I traded this very small, and I want to be cautious and follow my rules. I captured some flushes, and I was done by 11 a.m. I think my last short was around before 11 a.m. And because I don't want to be part of a squeeze if it starts to come back, because that float is small. And we don't know if they're going to dilute it or not. You know, it's likely, but it's not for certain. So I do know Chinese insiders, and the stock was 1.4 million float. It can squeeze a lot more. I've seen it all the time. You know, it's very volatile stock that I want to be careful. And that's why I don't want to trade these things past 11 a.m., especially a float that size. Short selling these short-lived pumps is a very profitable edge in trading. You can find this kind of setup almost every day. However, you must know how to avoid the black swans. Some small cap stocks can really squeeze for multiple days due to manipulation. The institutions or the big money know that the short sellers are looking for pretty much the same thing to short. So they could target this specific trading behavior and pump money and trading volume into a highly shorted stock. This leads to what we call a short squeeze, which is when the inexperienced short sellers or the greedy ones are catching massive losses. I'm not a genius, so I've been there too at the beginning of my trading career. Even as an experienced trader, I still make mistakes sometimes. Guess what was the biggest trading loss in my career? If you know the answer, comment down below. I personally check every single comment and like to interact with you too. So having a set of stock selection criteria is very crucial for your consistency and risk management. Especially if you are new to trading, pay attention now. My updated pre-market stock selection criteria. To walk you through my trading criteria, I'm going to use a very underrated trading tool called Flash Research. I'm showing you what kind of filters I use so that you can implement these into your stock selection process too. So now I'm going to look for some criteria for Flash Research. So I like to look at the gap analysis tool. And here we go. So Let's put some criteria over here. Volume, range, price. It has all these things you can do. Let's start with this year, January 25 through May. Today's the 13th, so let's pick 12. Gap value, 100%. Max value, 1,000%. Let's pick 10,000%, just in case. Minimum volume, 1 million. Maximum volume, yeah, let's say that's good. And then range, let's say, 25%. We need a bigger range. Let's say 40%. Max, 1,000%. Price, $1 to 20, let's say. All right, so this is an example. So say pre-market high gap. How do these things perform? Let's check it out. So number of gaps, 45. The average gap value is 257. Remember, we only did 100% gaps. And this is what it's been like this year. Average market cap, so it's the small caps that are doing it. Average high spike, so this is the spike. Average close red, so a lot of them close red. And you can see, I like to look at the exchanges. So the Amex, 5 of them. NASDAQ has had them all pretty much. Check it out. China, of course, so we have the Chinese stocks there. Let's look at the healthcare. So you see biotechs, they squeeze a lot. Biotechs are related to healthcare. So this is a really good quick study. You see how fast I did this. So to sum up my stock selection criteria, I focus on gap value, volume, range, and price. And you can see the date range. I picked, like, I wanted to look at January this year, 2025 up to now, to see what I got, see what we got in the current market condition. But you can go back, ideally 5-year range. I like to see like before COVID and after COVID. It's a different market because COVID reinvented the market, you know, so like more pre-market volume happened during COVID than ever, and it changed the game. So it changed the volume in small caps. Very good stuff. So Flash Research is a great tool. If you are interested in using Flash Research to improve your trading, feel free to use my discount code in the description of this video. My non-negotiable trading rules. Another big part of my trading routine is to follow my trading rules that I set to protect myself in small cap trading. Stock scams, market manipulation, insider trading. All these are real, especially among the small cap stocks, because essentially these small companies are struggling to stay profitable. Many of them may not even have a real functional business operation. They are listed on the stock market to raise capital. So knowing the agendas behind a stock is very important to my trading style. My top trading rule is to never short a Chinese related stock. Chinese low float stocks have destroyed more accounts than you think. Now let me clarify, this has nothing to do with Chinese culture or race, strictly based on statistics. We have seen too many massive short squeezes among the small cap stocks with a relation to China, whether it's their country of establishment, the country where they are operating in, or their fund managers. So knowing that my probability of success as a trader is much lower in shorting a Chinese low float stock, I like to keep it simple. Just don't touch them at all. Some traders like to think that they can beat the odds. They think that if they wait for the end of the final squeeze and the time is right, they can hit a home run. But I strongly disagree with this kind of mindset. Let me share a real low float Chinese stock short squeeze that just took place recently in 2025, MLGO. And unfortunately, I found out about a big group of traders who listened to a guru telling them to short this stock. And worse, they were told to swing trade and hold on to the stock until the massive blowout. Okay, so I also subscribe, as I mentioned before, to pump and dump emails. So I go on Google, and I've done this in the past, and like you do it, it's like a one-time thing and you just keep updated with it. I reverse engineered the pump and dump. So it's like, I sign up, I type on Google, you know, like get rich quick stocks, for example, and then like I'll sign up to whatever pops up, like a landing page. I'll give them my email, give them my phone number, and they send me text messages of what they're pumping. And that's part of like one of my strategies that I go in full depth at the Friendly Bear University at the very, very meticulous detail level. Just like Chinese stocks, they go thousands of percents up sometimes. There's no way to outlast that squeeze, especially as a newbie. You have no idea what you're doing. The worst thing is to follow a guru that leads you to the slaughter and you lose everything. Okay, so this is a guru who promotes himself as like shorting is easy. You know, I subscribe to the emails and like, you know, I'll delete them, but I'll take a quick glance, and like promotes a short selling is easy, and you just follow me They all come down. Let's bag hold the short selling. You know, so with short selling, bag holding, the holdings overnight, it's very dangerous. You know, so especially when you have no criteria. When your criteria is poor, you're susceptible to some outlier nastiness. So for example, Chinese stocks. And I look at this furu all the time. Like I look at the email, I'm like, oh my God, man, like, what are you doing? You know, like you're holding a Chinese stock overnight. You're holding a biotech stock with like real news overnight. You know, I saw like the holding CRVO for months or whatever, for weeks, holding MLGO for weeks, holding these other Chinese stocks for weeks. But you can see over here, this furu is bag holding MLGO at 228, 10,000 share position. By the way, this is very dangerous because a big player, you can tell this guy is not only a furu, but like he's not a smart furu. Actually, this is worse than I thought. Now that I'm looking at the chart, so he was bag holding this from February. March 19th is when this screenshot was taken. And then March 20th, it goes on another run. MLGO starts going out of nowhere. And it starts going for another 2 weeks. Actually, it goes for a month. And it goes from $2 to $32. March 24th was the massive squeeze. Check this out. So he crops it. He puts MLGO. Like, this is so misleading. He puts the period so you don't know what ticker it is. If you don't keep track of the emails every day, you're like, you don't know. So you don't know the ticker. I know the ticker because I've been watching his emails all day. And he takes off the unrealized section. He doesn't want to see it, but that's probably like negative 200 grand. So if he's short 10,000 shares, he's short 10,000. We know he's short 10,000 at 228. And the stock went to 14 on the 24th. And by the 10th, by April 10th, so March 24th, it went to 14. It's very easy, guys. Don't short the Chinese stocks. If you want to have a career in trading and short selling specifically, don't trade the Chinese stocks. So yeah, with MLGO, likely the guy lost big. He was, I know his accounts were a little bigger than usual. He would show it from time to time. Might have blown up the whole account. Who knows? That's the thing with trading. We don't know. If there's anyone saying that shorting Chinese stocks is good, it's okay, that's a furu. You know, it's like you got to know who's behind the screen, who you're listening to. How long have they been trading? If they've been trading like another thing before, like let's say they were trading Forex or crypto, and now all of a sudden they've been shorting stocks for the past couple years, and now they're teaching, yeah, it's a red flag. And their criteria is lax, and they're making it sound easy, like it's just it's easy money. It's not easy. This is a hard game. It's very simple. Don't trade the Chinese stock. That's it. That's it. But telling others to short it, oh my God. Leading sheep to the slaughterhouse. That is no bueno. So, just be careful who you follow, and because it's very nasty out there. And it could be like they don't intend to do that, but like, if you don't know enough, you shouldn't be teaching, and you shouldn't be leading others to the slaughterhouse, even if it's intentional or unintentional. Just like, yeah. Anyway, do your due diligence before you follow anybody or learn from anybody, because you could be learning the wrong thing and wasting a lot of time, and most importantly, wasting a lot of money, and hopefully not losing your shirt. If you short MLGO, you're gonna lose your shirt. I hope none of you watching this right now happens to be a victim of this furu trade alert. Having a mentor is very beneficial to beginner traders, but make sure you know who to follow online. Know their track records and credibility before you learn from them. I'm a mentor at Friendly Bear University, which is primarily a community for short sellers. We don't do any copy trading or following alerts here. The traders that we work with are here to learn from our structured education so that they become an independent trader who knows how to find the right stocks to trade, how to manage risk according to the probability of a setup, and most importantly, I'm a mentor who shows up in person. The FBU members have access to my office in the US Bank Tower. They can speak to me in person and see how I execute trades. If you are interested in learning in person with me, you know where the link is. My second most important trading rule is having a daily max loss at the broker level. We all talk about trading discipline, but we're only humans. We make mistakes. So my risk management begins with the way I select my stocks to trade during pre-market, down to the way I calculate my share sizes and manually cut losses. And also knowing when is my A setup versus B setup, where I reduce my position size. But the ultimate trading rule that I recommend for all traders, regardless of what your strategy is that you must set a daily maximum stop loss with your broker. What this means is that your broker will automatically close all of your open positions when you hit a maximum daily drawdown, and your buy and sell buttons are disabled for the rest of the day. After 8 years of trading, I'm still following this rule strictly. I have a daily max loss set with my broker, Cobra Trading. If your broker doesn't offer this feature, you can consider switching to Cobra. I recommend Cobra Trading because it has all the benefits that I look for as a day trader. I've been trading with Cobra for years, and is by far the best broker I've ever used, especially for short sellers and small cap traders. Here are 3 main reasons why Cobra is my top recommendation. First, fast execution speed. With Cobra, I never worry about missing my ideal entry because my orders get filled quickly and accurately. In small cap trading, milliseconds count, and Cobra's direct market access gives me a real competitive edge. Second, access to hard to borrow stocks. Cobra consistently has one of the best inventories for locating shares to short. As a short seller, I can find the hard to borrow small cap stocks on Cobra. I don't have to miss an A+ setup just because I couldn't find any shares to borrow. Third, limit order rebates. When I place my limit orders using Cobra's REB25 route, I actually get paid rebates, which oftentimes cancels out commissions. This reduces my overall trading cost, which adds up significantly over time. Also, Cobra Trading is an SIPC insured, regulated broker based in the United States, meaning your capital is protected. Your money is safe and you're trading with transparency. So feel free to try Cobra Trading yourself. You can get a package of trading tools that I use, including Ask Edgar, Trade Ideas, Flash Research, and Dilution Tracker if you sign up for Cobra Prime using my link in the description. So the top 2 trading rules that I just shared with you are pretty simple and straightforward. If the stock has any Chinese related agendas, don't trade it. Make sure you have a broker level max daily loss. It takes discipline to stick to your rules. Finding a trading pod is also helpful. You can trade with like-minded people and get them to hold you accountable for your rules and goals. Don't forget to like this video if you have learned something useful, and share this with your trading partners. Click this playlist over here to learn from my free trading education and strategy tutorials. If you are ready to bring your trading to the next level, you can consider joining the Friendly Bear University and trade closely with me every day.